Hello friends, many of you have asked me a question which is very pertinent in today's market type. Vijay, my shares don't seem to be rising. As a matter of fact, my portfolio is slowly but surely sliding downwards. But the headline indices, the Nifty and the Bank Nifty are gradually rising higher. What gives? What's happening? Now, this video is to particularly answer this question. Is there something strange happening? No, this has happened in the past. Can it happen in the future? Yes. And what does it mean for you? Especially, what does it mean for you? Now, friends, before I proceed, a lot of my online family members have told me that my videos being in English, they have a slight problem. Slight is an understatement about understanding the language and especially certain terms and terminologies that are new to them. Well, here on your screen is a fix. Now, YouTube provides you with that geared wheel on the bottom right hand side of the video pane. That's a settings button. Click on that. A box opens out there. Click on subtitles. Enable subtitles in the language of your choice. It could be Kannada, it could be Telugu, it could be Odia, it could be Gujarati, Marathi, whatever. And you can have subtitles to all my videos without paying a single naya paisa. Tell me your problems. If I can, I'll find you solutions. That's what we are here for. Now, to come back to the point of the video. Why does this rally not feel like a rally? Now, I was doing some number crunching. Now, as you know, we have two trading models in-house. IBEX is the statistical trading model and Barracuda is the behavioral trading model. So we asked IBEX this question to find out as to what is happening. There are 180 stocks in the futures and options list. Now, out of these 180 stocks, we told IBEX to check and tell us how many were how far down from their recent peaks, A, to the current level, and B, to the all-time low in that 20-week period, and then having bounced back a little. The answers will surprise you. And therein lies your answer about why this rally does not feel like a rally. I found that over a 20-week time frame, that is 5 months, there were more than 2.5 dozen stocks that were more than 10% below their peak as on yesterday evening's close. Now, the classic Dow theory tells us that if any traded security is down by 10% or more, it's treated as a deep enough correction. If it is down more than 20%, it is treated as a bear market. Which is what I told you when I debunked the theory that copper was in a super cycle, the theory that started tom-tomming itself in December 2023. I've been telling you there is no super cycle. Whether it's copper, whether it's aluminium, whether it's natural gas or crude oil, right? So I found more than 2.5 dozen stocks which are down between 10 and 20% from their peak as of yesterday's close. But from the peak to the bottom, and then having come up a little, you have to add 8 more stocks. Now, out of 180 stocks, if you're going to have 30 to 40 stocks which are deeply in correction mode. And remember what I have told you about MWPL. Keep watching MWPL. If you are even slightly mathematically or statistically minded individual, please do not ignore this, because this tells you as to how much greed, how much hope, how much desperation, and how much panic you can expect on a particular counter, because MWPL tells you how much emotional and financial commitment there is to a particular stock. Now, almost 90% of these stocks have seen MWPL at elevated levels in spite of the fact that prices have come down, which means if there is even more adversity coming in, adversity to us traders comes from mark to market. Mark to market losses, if they increase, there could be more downside. So why are the indices higher? Do you remember I had made this video about whether you should be trading stocks or whether you should be trading indices? I explained to you the difference from a thoughtful, intellectual thinking trader's point of view as to what is the difference between trading individual stocks and indices. Now, within this video, and the hyperlink to that video is in the pinned comment below and in the description below this video itself. So don't fret. This is what I had said. Now, look at the Nifty-50. Why is it called the Nifty-50? Because it is comprised of a total weightage of 50 stocks. This weightage is not static. It keeps adjusting every month. To that extent, this is something I can assure you not too many people know, and therefore not too many people will tell you. The weightage in the Nifty 50 of individual stocks is telescopic. So the weightage of individual stocks in the Nifty changes every month. Now, take a look at Hindustan Unilever. What do you see? The weightage of Hindustan Unilever has fallen in the month of March over the month of February. Do I need to tell you that the price of Hindustan Unilever fell in the month of March? I don't think so, because you can verify it yourself. Investing.com, chartview.com, tradingview.com, hell of a lot of places where you can see that. Now, why is the weightage of individual stocks telescopic? Because the NSE or the index management service, which is looking after the NSE indices, rewards a particular stock by increasing its weightage in a month when the price has risen in the prior month. And what happens to the stock whose price has come down? Its weightage is reduced in the following month. Now, what happens to the Nifty when you start assigning a higher weightage to a rising stock and lower weightage to a falling stock? Hey, the Nifty will not fall as much as individual stocks. Now you get it. So the index is therefore relatively made safer. It doesn't fall much. It gives you a feel-good factor. It tells you that the market is doing well. But you'd start to get severe headaches and migraine attacks and stresses and strains and palpitations of the heart if you were to calculate some of the more volatile counters. So friends, there you have it. The magic about why the indices don't fall half as much as individual stock comes from the weightages. Now, this is something I've been telling you time and again of the weightage, especially of the banking and financial sector stocks, which enjoy a 34% plus weightage in the Nifty, as to why the heavily weighted stocks are important, why banking and financial sector stocks are important. This will also tell you that WYSIWYG, what you see is what you get, does not exist in this market. There is always a reason why things are happening. Things don't happen for a fluke. And since these are financial markets, the reasons are also financial. We traders, being brain warriors, we fight and win our battles with our minds. Keep your mind sharp and always keep your eyes open. In my two videos here about counter-cyclicality and pro-cyclical markets, I have told you that in counter-cyclical markets, particularly at the end of counter-cyclicality phase, there are a lot of trades that are initiated and triggered by smart money that are just to suck in the retail guys into the market, particularly in high-risk trades where they should not be. Now, this is what, frankly, IBEX is telling us at this point in time. The heavily weighted counters are rotating like a game of musical chairs so that the indices are appearing to rise, whereas your stock portfolio is either languishing and sliding slowly, or it may be very, very stagnant in the best case scenario. So now that you know why, you will obviously want to check it out for yourself. Hey Vijay, I don't believe you. And you told us DTA, don't trust anybody in counter-cyclical or pro-cyclical markets. So give me the proof. Where is the proof that weightages in India, in the Nifty and the Bank Nifty are telescopic? Now, I'm providing you a hyperlink to NSE's website where you can download the weightages file on the 1st or 2nd of every month. Now, when you download this weightage file, you will see how the weightages are changing month on month. Stocks that have done well in the previous month have a higher weightage in the coming month, and stocks that have fallen in the previous month will also see their weightage fall in the Nifty in the following month. Ditto for the Bank Nifty. This tells you why the rally might be appearing on headline indices, but your stock portfolio may not really be catching up with the headline indices. Here is the secret to it. Why does nobody tell you that? I don't know, but hey, we are statistical systems traders. We basically like to have the cause and effect theory of knowing why what happened when it did happen, and also knowing the cause tells you how long it will happen. So how long will the indices continue to outperform individual stocks? Hey, as long as you have the telescopic system of weightages, the indices will always remain less volatile than individual stocks and not fall as much as individual stocks. This is something you need to know and plan accordingly before you trade ahead. Friends, before I wind up this video, a reminder to subscribe to my YouTube channel if you haven't already done so. In the comment below, please tell me how my work helps you become a better trader. Click on the bell icon to receive instant alerts for fresh videos being put up out here, and share my video with smart traders like yourselves and your social media groups, etc., so I can reach out to a wider audience. I thank you for your patience in being with me in this video. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Have a very, very profitable day ahead. Take care. Bye-bye.